Okay, well, welcome to the weekly market commentary from 2nd to 6th October 2017. First, we're going to look at the financial calendar this week, and today is Tuesday, though I couldn't provide the analysis yesterday on Monday. But Monday, we could not, there were not much of an action in the market rather than the USD ISM manufacturing PMI, which came out positive, and GBP manufacturing PMI, which came out negative, but that did not quite uh, make the USD to get some impulsive gains, but the gains were steady and it was quite consistent. So today there was a news about Australian cash rate, which was not much of something that we would like to expect in the market, that is quite unchanged at 1.50. And other news were some kind of like mixed, because the HINE home sales report showed an increase, whereas the building approvals were not quite to the expected ratio. So on the other hand, the GBP construction PMI showed a negative report. So there are certain amount of pressure on GBP, as UK Prime Minister May recently stated that Brexit process might take around a few years, like 2 to 3 years, to fully recover from. So that did shake off the market sentiment, which will lead to a great amount of bearish pressure in GBP USD recently. And tomorrow we are going to have Australian AIG Service Index. That's the only news of Australian tomorrow. And on the GBP we have Services PMI, which is expected to have a slight increase of zero point 0.1. And USD ADP non-farm employment change, that is going to be a very important news because it's quite high impact, and it is expected to increase the volatility in the market, as well as the ISM non-manufacturing PMI, crude oil inventories, and later ECB President Draghi is going to speak. So tomorrow is going to be a very volatile day for Euro US dollar currency pair. And on Thursday, the Fed Chair Yellen is going to speak, and it's actually on Wednesday night. It's showing Thursday because my current time is about GMT plus 6. So after that, Australian retail sales and trade balance report is going to be released. That both of the important high impact economic report is expected to show an increase, and along with that, after 12 hours of time, Canadian trade balance report is going to be published, along with unemployment claims of USD. Both are expected, though the Canadian trade balance did not have any kind of expected figure, but USD unemployment claim is expected to show a slight decrease of 2K only. If that happens, if more decrease we see, that's the better for the currency. And on October 6th, that is on Friday, the end of the week, we'll be having a great amount of economic reports on Canada and USD, because Canadian employment change and unemployment rate reports is going to be released, as well as the non-farm employment change is expected to decrease to 88K, and average hourly earning is expected to rise to 0.3%. And unemployment rate of USD is expected to be unchanged at 4.4%. So there are going to be high impact news in this week. So before Friday, we might expect some uncertain volatility in the market, which might be quite confusing for some traders, and it can create some kind of noise in the market. So always try to maintain your trade or manage your trade according to the market's needs, so that you don't fall into the market's trap. So let's go into the chart. First chart is Euro US dollar, as expected, because I always love to start with this chart. This is a very beautiful chart and beautiful currency pair that I've ever traded with. And this currency pair, as you can see on H1 and H4, it has gone through a lot of bearish pressure recently, And to be honest, I was selling from 1.19, and I had took profit around 1.1710, and then it went up. I was not there. Then it went down. I was still not there, and currently I am just inside the trade at 1.1750 with the targets towards 1.1620. That is like at this point, below this point, I think. Yep. Yeah, I already have a level over here, and see, this is one of the spike area where the price is expected to move towards. Though in the daily we can see that the price is kind of in an indecision phase, but in the H4 and H1 we can see that as the day progresses, it is 20 hours already, 4 hours to go to complete the daily candle. So there are certain chances that the price will move down a bit, and we might see some kind of a dodgy kind of candles over here, so that, and later we can see the moves towards the 1.1620, but that those things are coming later on. But currently, as the price remains below 1.19, we are in bearish bias, and the dynamic level of 20 EM is also showing something like that as well. And if you just see on the divergence thing, if you just look at some kind of divergence setup, we can see that the price has already, if you just go into the H4, the price is currently going down, and the indicator is also showing a going downside. And on the other hand, if you go to just I'm going to delete all this because I'm just trying to show you how divergence might be very important for a price action trader, and which might really add into the price action column. So just to give you a tutorial in this, from this point to this point the price moved down, okay, but the divergence showed that from this point to this point the volumes are going down as well. So that means the bearish pressure is going down, and though we can expect that the price will go a lot more towards 1.1620, but whenever I saw that the price is showing some kind of a bullish divergence over here, there were certain chances that the price will be pushing up higher. So in this is the most important use of divergence, because what I really need is when I should get out of a trade, and when the trade can counter, that might save a lot of money or might save my break evens as well. We can take some good profits along the way. So for that reason, I always try to use divergence for getting out of the trade or understanding the market behavior that is going to come. So the next currency pair we're going to see is GBP USD, and in this pair we are seeing already the pair price is going down, and in H1 it has been a good amount of volatility in this pair, and it is currently going down, but I'll be expecting some kind of corrective structure before the price moves down to the support area of 1.3050 to 1.3120 support area. Then the next currency pair comes in is Australian US dollar. It is currently residing inside the support area, but I'm currently not going to trade in this kind of pair because the price action is not quite clear over here. This big move cannot be taken over by this kind of small bearish rejection candles. So as the price remains between the support area, I'm on the sidelines, and if the price breaks above this 0.730 with a daily close, then I will be looking forward to buy with the targets towards 0.8020 to 0.8080. The next currency pair, one of my favorite currency pairs, is USD Japanese Yen. Though this currency pair has been reacting very weird recently, And as you can see over here, the channel I am marking right now, it has been very messy over here, and all these days the chart has been very messy. So what should we do in these cases? In this case, the best thing we can do is just mark some levels. I'm just going to delete this level that might increase to my noise in the chart. So currently the chart is residing in a range, to be very honest, and currently the dynamic levels has been violated so far, and it doesn't indicate or signal anything. But as of the lows are getting higher, you can expect that the price is expected to rise higher. That's a general fact. And if you just go into a zoom in mode, you can see that the rejections of the rejection that has been in the market is quite a good amount of rejection of bears, and which does mean that every time bears try to dominate the market, bulls came in, and recently it did happen 2 hours ago. So there are higher chances that the price will move up and it will break above the 113.19 area, and if it does that, it will go directly to 114.31 to 115 resistance area. The next currency pair comes in is Euro Australian dollar. In this pair, we can see that it is going through a good amount of correction. That correction range has been in the market since August, and the currency pair is not showing any kind of good signs over here. And currently we'll be in a sidelines. If you go into the H1 chart, not liking it. H4 chart, I'm not liking it. And in the D1, nothing to trade with. But in this case, if you see any kind of pairs with this kind of price action, we'll be looking for any kind of daily close, break above or below the resistance or support area. That is the best thing to do. The next pair comes in is Euro GBP, and in this pair we can see that the price has moved up towards the resistance area before it banks towards the support area of 0.8420 to 0.8532. But as the price remains between 0.8950 to 0.8850, this 100 pips, we are expecting some bearish moves, or else if the price breaks above this with a daily close, we'll be converting our bearish bias to the bullish with the targets towards 0.9267. That is the tip of this iceberg. So thank you for being with MFX. We had some kind of technical difficulties for which we could not provide the analysis today, and some of our members are already experiencing some login problems. I'm currently trying hard to overcome that as well, and it will be solved soon, as we are trying very hard. And if you need any kind of help, you are always free to contact me with email to help@mfxcenter.net, or if you want to contact with any kind of psychological issues in trading, or if you are not making a good amount of profit in trading, you can also mail me to ceo@mfxcenter.net. Thank you for being with MFX. If you have any questions, feel free to ask. There is a chat box, you can chat over there. So have a blast this week, and make sure this week is going to be a very volatile week, and there might be a good amount of price actions going on, because there are some certain high impact news which are going to impact the market quite well. So in this case, you are expected to remain calm and relaxed while trading, and make sure you manage your risks and trade properly. Thank you for being with MFX.